Hello everyone, happy Sunday. It's Simon again with AvaTrade, and we're starting our weekly trading plan webinar. And I want to welcome everyone back to our webinar. And for the new people, I'm very happy that you're visiting us, and I hope this will be practical and useful for you. So the idea of the webinar, as I always say, it's plan the trade and trade the plan, and this way we're creating a structure and some kind of a trading scenario and guidance what we are planning on following in the upcoming week. And if you talk to traders that are succeeding in this field, it's always better to have a plan and stick to it as opposed to just randomly and impulsively trading. So these are a few words about me. I'm currently a senior account manager at AvaTrade, and I've been involved with trading since June of 2000. I started as a prop trader on Wall Street. I work in a few firms, and then I was mentoring and educating other traders, and currently working with AvaTrade as a senior account manager. Now, the agenda of the webinar, we usually talk about indices, stocks, commodities, and FX. It could be in a different order, but we'll cover pretty much what's written here. And here's the information how to be in touch with us. You have Twitter, you have Telegram, and of course the YouTube. This webinar is also being recorded as other webinars that are being done by my colleagues, and you can always find them on YouTube together with a lot of educational material and tutorials. So before we go any further, this is the risk disclosure. Of course, everything that we talk about here is just for educational purposes. And if you have any questions, you can find it at avatrade.com. So let's start. I usually like to start with the big picture and see what's happening. And again, I keep on repeating myself. I hope one day I'll just say, it's not that I hope, it will happen. And I hope it's going to happen soon. We'll say that the war is over and Ukraine has started to rebuild itself. But as of now, the war is still there. Unfortunately, it's affecting, of course, people. People are still dying, being injured, unfortunately. And of course, the conflict has geopolitical effect. And of course, markets are being affected by it and so on. So the war is still there. COVID, we don't hear much about it since the whole attention is to the war. And I think it's just fading away slowly. And of course, last week we had something that we've been waiting for. It was a second in a row decision by Feds to increase the rates. And there was a question: should it be 0.5%? Should it be 3/4? So they did raise it by 0.5%, and they did announce they're going to start unloading the balance sheet that's holding trillions of dollars there. And we'll take a look at the markets, what happened there, of course. And so that's out of the way, but we have more increases coming, and most likely it's going to be one after another 0.5% increases. And the Feds are trying to really bring the inflation down by doing it. As you know, we are the 4-year high on inflation, and it's not helping regular people. The prices, of course, like I said, the war is also added to it. The prices of gas and other things, oil, it's been skyrocketing, and it's just adding to inflation as well. So here's the economic calendar, and I always say that it's good if you do your own research and follow the events and announcements on economic calendar. What I do here, I just take the high impact events, but you should pay attention to, first of all, what you're trading and how is it relating to the announcements, and you can follow up and make yourself reminders and just to be aware that certain things are happening. So these are the high impact events or announcements that's happening in the upcoming week. We have Bank of Japan monetary policy meetings minutes coming out Sunday night. And as you know, yen has been at a critically low level, so maybe we'll hear something from the Bank of Japan as far as what they're trying to do. They are trying actually to increase the value of the yen because they're being heard on the buying side as they buy a lot of commodities and other things from abroad, and the cheap yen is helping on the export what the product they're creating, but they're really suffering on paying a lot for raw materials and other things. So that's on Sunday. Wednesday we have consumer price index from China. We have consumer price index from Germany. We have president of ECB speaking on Wednesday as well, and we have the CPI numbers, very important and highly followed numbers by the Feds. That's the inflational numbers. And let's see how market will react to it, of course. We have GDP numbers from UK and Michigan Consumer Sentiment Index, which has been suffering lately. The consumers are not so excited about the upcoming weeks and months, not to say the years. So these are the events that are coming out. So now we're going to switch to the MT4 and we'll go through certain instruments. We'll start maybe with stocks and follow with indices and so on. So with the stocks last week, we'll start with indices. So then we'll probably follow with the stocks. This way it's easier. So if you take a look at the daily chart, the last 2 days were really sold out, and that's happening actually after the announcement. So I was actually watching the announcement on Wednesday, and I was listening to Powell's speech, and parallel to that, I was also listening to comments on CNBC. That's what I used to do as a trader back in New York. So they got all excited. There was a have a percentage instead of some speculations of 0.75, and everything's kind of under control. And Powell has this talent to really calm the people, like everything's under control and so on. So that was on Wednesday, and then Thursday would just follow with a huge drop in the market. So the traders are not buying it that everything's great, everything's under control. As you could see, the market's sold out. So well, let's take a look what's next. And if you see over here, if you remember, we spoke about these levels here on S&Ps around 42.30. That if we start closing lower, it's gonna continue, and that's exactly what happened. So the previous week we closed below it, and then the week that we just finished, there was a pop to the upside, and then we closed. We are holding the previous week's low. Let's just take a look here. So the low of the week of the end of April, April 24th, the low was 4116.75, and we did close at 4112. So we technically closed below, and that brings us pretty much to the confirmed, even on the weekly chart, on the lower low. So here potentially the market is open for continuation to the downside. And if you are following the markets, and if you're reading or listening to some reports on reputable analysts, a lot of them are in the recession mood. They're all talking about recessions coming, and not much positive coming out of the analysts. So technically, besides all the fundamentals, technically we are in a way confirming here a lower low. So just to explain to you what it means, we had the highs over here recently. That was the beginning of the year, or the end of December. January we tried, we failed to go higher. Then we had to move to the downside in March. Then the second week of March we tried, we made a lower high, and now we confirm a lower low, which now we could go zigzagging to the downside, or also we can just keep on dropping without any attempt to go. But we're not going to speculate. We'll take one day at a time. So this is S&Ps. If you take Dow Jones, actually similar picture. It looks a little bit stronger here, and the weakest one is the Nasdaq. It's really just it was in the free fall for 1, 2, 3, 4, 5 weeks, and we are actually at this level here that we might find some support. We said that 13,000 was a support here, which broke through it. We had 2 consecutive weeks closing below it, and we kind of playing with the 12,500 level here. So let's see what the upcoming week will bring us. So the US indices are selling. China has been selling. They're still suffering a lot with the COVID issues there. They had lockdowns and a lot of negative influence of the COVID, as you could see. And Nikkei is actually holding strong here. Maybe a weak yen is helping it a little bit. So it's been holding, not really selling heavily here. And Nifty 50, if you take the daily chart, where the big drop in the past 3 days, for those of you that follow this index, the Indian index. Now, FTSE had the drop, and as you probably heard, we'll go in a moment to pound. The Bank of England, they surprised everyone with the increase on the interest rate, and they are saying that there's a big chance of recession. And actually, when that announcement happened, all the global indices reacted to it. So FTSE had 2 straight down days. DAX, it's following also the indices. Now it's a very interesting level here on the DAX. I know a lot of you are trading DAX. Take a look. 1, 2, 3. We have a tripled bottom on a daily chart. So we could be holding here. Of course, we'll see what happens with the U.S. Markets as they continue falling. But at this level, if it holds, we might see a little bit of a bounce. But take a look here. We've been doing a similar idea. We've been making a lower highs and lower lows. So if we start closing below this 13,577, we might see continuation to the downside. And if you take a look at the weekly chart, if that happens, we can continue sliding, possibly even for about 1,000 points to around 12,500 level on DAX. So that's also, as you know, because of the Russia-Ukraine, the prices of the oil and natural gas went up. We're going to take a look in a moment, and that's really affecting the German economy. So that's as far as indices. Again, just to summarize this segment of the market, it's a strong downside pressure. Messages of recession from US. Now UK is talking about it. And of course, Europe is not doing that great, and the war is really affecting it in a negative way. So let's move to the stocks. And if you remember, I said that if the markets start falling, Amazon was really the one that doesn't make any money to investors for a while. So there will be a lot of pressure to it. And if you take a look, actually, out of the big guys, you know, that I call them, the Apple, Amazon, Google, Microsoft, Netflix, it's been the weakest. So take a look. We're really falling. It's a free fall here. Let's see if we can find any. This is a monthly chart, so we can continue falling in to around 2,000. That's another $200 to $300 fall possibly. Let's take a look. We are way below. If you take a look at the similar picture on the indices, we are way below, and this lower low is really intense. So Amazon is selling. Apple is actually holding on the 50 moving average on the weekly chart. It's kind of holding its strength. Amazon, we said it's falling tremendously here. Google It's approaching the 100 moving average on the weekly chart. So there is a possibility that we might hold a support here. As you can see, this is the level after the correction from which we made high. So potentially this 2200 or 2220 level might be support, as it's also working together with the 100 moving average on Google. Tesla, similar to Apple, is sitting on the 50 moving average. There was a sell-off on Tesla. Everything, of course, the market. Like again, I just want to remind you, when the market is falling, even the best stocks are going to get sucked in. So Tesla is a great company, as you know. They've been reporting great numbers, but in the past weeks, all the announcements with Elon Musk buying Twitter, that created a little bit of a panic with investors, because they said that he might need to sell some shares to purchase the company, and actually it did happen. Afterwards, he announced that he was selling for 2 days, but he said he's not planning on selling any more shares. So we had a bounce over here, but then the last 2 days of the week we had a drop, so Tesla went down with it, but we are holding. And back to weekly chart, similar to Apple, the Tesla is sitting on the 50 moving average on the weekly chart, so it is holding up over here. So this, as far as the big stocks. Now something that caught my attention technically. Now, if you remember, I told you about AT&T, since they spin off all other things that's not related to the main business, the telecom. The analysts been talking pretty good things for the future for the stock. And take a look. If you take a daily chart where the market was falling, this drop was after the spin-off. And we talked about the stock around 1950, I think, last week or the week before. So it's not really falling with the market. That's the opposite. It's trying to break to the upside of 20. So we had 1, 2, it's a third attempt. And really, analysts are predicting very good future as AT&T went back to its basic business without any confusion with other areas. So technically, it looks good on the falling market. The stock's been really strong, and potentially I could, or it is already attracting investors and traders to it. So something to watch. Snapchat has been selling, as a lot of similar stocks was selling, of course, the market in general. But if you take a look at the weekly chart, why did I bring this up? We are technically approaching this level over here, from which, first of all, we had the resistance, then we had a nice run from this level around 24 and a half, and on this spike we reached that level. The low was 24.27, and last week's low was 24.79. So something to pay attention here. Around 24 and a half, $24. If the market survives and it's not tanking, we might see a bounce in the stock again. For those that are looking for some speculative trading, and again, everything we talk about here just for educational. In no way you should take this as a trading advice. Just a reminder. So this is the Snapchat. Another one is Disney. Disney is reporting actually on the 11th of May after the market, and the stock's been beaten up. It went down also on Netflix news, and all the streaming stocks really suffered lately. And what's here on Disney, we are approaching this level over here. We had the bounce here, we had the bounce here. So the similar level around 108, which we touched on the last week. The low was here 108, 108.22. So 108 level, it could be support that Disney could see. But again, as I said, on the 11th, they are reporting the numbers, and let's see how things are, especially how their streaming business is doing. The investors will be looking into it. So that's it. We'll finish with the stocks here. We'll move to commodities, and as I said, the war is still there, and oil and natural gas especially is being experiencing a lot of volatility. And take a look. This is the crude oil. So on crude oil, we did dip below 100, and we held around 94, a nice support, and then 100 we broke, and recently in the past 2 days we broke about 108, and that was the previous resistance that we tried to test here. Here was a triple test here, or triple top, some traders like to call it, and now we had the closure on the 5th of May, and then as we confirmed the closing about the resistance, we had a nice advance move on Friday, and possibly we might continue to the upside as the oil prices are really skyrocketing here. So if we continue higher, so 116, 117 area would be the next resistance. And should we go lower, so again, we should retest 108 and confirm that that's support. And if not, if we're not holding it, then we're gonna go and retest 104 and 100 area possibly. But as of now, if you take a look, we keep on making the higher highs and higher lows. We just confirmed on daily chart. We closed about these levels over here. So oil is strong. Natural gas is on fire. Besides Friday, really taking profits. This almost started from 6.5 after this correction from the 8 area, and then we went straight. I think on Friday we reached $9, almost 8.98.7, and then it triggered the selling. So we might find a support around these levels here. This is where the sell-off happened, around 7.8. And if we are confirming this support, we might see another leg up. Some analysts said we might reach 10. I mean, we just did 9. So everything is possible. And again, a lot of issues. Europe is really suffering with the high prices in natural gas. And just to think about it, if you take a look at the weekly chart on natural gas, just in January, we were at $3.50, and then we reached $9 in 3 months. It's a super crazy move to the upside. But again, I like to show the big picture as well. There was no war and no threat of Russia cutting the natural gas. This was a year 2008, before the crash of the US economy that dragged the world economy to the downtrend. Before that drop in 2008, we were at 13.5. So again, I'm not saying we'll get there tomorrow, but we just got from 3.5 to 9. So potentially, hypothetically, anything could happen. We can go 10, 11, 12, and then go retest 13. Everything's possible in today's day. We don't really know. So I just wanted to illustrate to you how we really dropped from these levels all the way to 2.5, and then a lot of then we were trading in the channel between 130, 140, and $4 or $5, and then we just break out of it, and we could move higher here. So natural gas really high focus together with oil. Now let's move to metals. Gold. Gold had from the recent sell-off. It's been really weak. We had the 3 down weeks on gold, and of course it's relating a lot to the strength of the US dollar. We're going to take a look at it in a moment. So also last week I spoke about copper. Copper had an attempt actually from this level over here around 330. We had an attempt. We went to 443 and then we sold out. So we are approaching on copper certain levels of support around 422. We broke through it here and we came back to this level. So unless we close below this 422, we might actually have another attempt to the upside. And let's see how the price action will play. If we see some kind of accumulation about this between 422 and 428, we might see a continuation to the upside. And again, all this move, of course, as you see the equity markets going down, the economy is risking recession, the global economy, so to speak. And of course, China, as economy is not doing that great as well, been selling off as well. So copper has been suffering strongly here, but we came again to the possible support around 422. So we'll be watching copper. Now the agriculture, the soft commodities, the wheat and the soybeans, nothing specific there, but corn looks very interesting here. This is the level we couldn't break before. Remember, I spoke about this accumulation, and then the moment we broke through it, we closed above this high of this spike, which was 782.5, and we tried to go higher. We had a nice move that we confirm the support around this 782. Then we tried again. We didn't close above it, so it was a fake breakout, and then we came right in. So two scenarios. One, we can start rebuilding here on the support of 782, possibly getting some energy for the move higher. Or if we start closing below 782, we might see a move lower, maybe to test the 50 moving average here on daily, or might even see a drop to the previous support from which the whole recent move started. So out of soft commodities, corn has some kind of a solid trading idea. Like I said, it's either we hold this level and move higher, or if we break below, it could be a selling opportunity for the next level of support. Okay, so that's soft commodities for you. Now let's move to Forex. And like I said, dollar index was it's been very, very strong, and that's partially why gold has been selling off lately. And take a look. We did reach the level as we spoke a few weeks ago. This possibility of reaching 103. It was kind of fantasy, but it did happen. That's why I showed you the natural gas, that everything could happen. We could see the highs again. Now we are facing or experiencing a strong resistance here, as this level here. This is a weekly chart again, and that's March of 2020. That's when pandemic started. So we came back to pre-pandemic levels. And again, two scenarios. With all the interest rate, the upcoming increases, we might continue to the upside, and I'll show you the monthly chart in a moment. Or if it really gets out of the steam and the buyers are not able to push it through this level, 103, what was here? 103.80. If we don't see closing about this level, we might see a correction or a profit taking or sell-off, whatever you want to call it. We might come back to 100 potentially as well. Now let's go to monthly chart, and monthly chart looks very crucial here. As you could see, 1, 2, 3 tops here, and if we are breaking from this level, it just opens a brand new space here that potentially we could go to 106, 107, 108 area. It could happen, but again, it depends on a lot of factors: how fast the interest rate will be increased, how other factors are playing out, and how the market is doing, and so on. As of now, it's been a risk-off market. The equities was selling. The gold is not experiencing anything as an inflow of money, so it looks like all the money goes into US dollar. That's why you could see this kind of a dollar became a safe haven. at this point. So let's see if it's not changing, we might continue moving higher, like I said, to 106, 107, 108 area. And we've been there in 2002. That's where the sell-off continues. So dollar index. Now, if you take a look at majors, technically, I mean, you could see it. We had the drop in pound, even though there was increase in interest rate, the pound sold out on that news. Euro's been actually holding this 105 level, but technically actually three currency pairs that I'm watching right now. It's dollar yen, like I shared with you. We'll see, maybe Sunday night will be the announcement. Anything to do with Bank of Japan, of the intervention, trying to increase the value of Japanese yen. So we might see the correction to the downside over here. Second pair is USD Chf. Take a look, it's been, of course, dollar's been very strong, but why we approaching a very serious level of resistance here. So 0.99, it could be a very crucial level that we might experience a resistance that might not break out. As you can see, this move was it was a very strong move without any pullbacks. This is the weekly chart. That's why we approaching the previous level of resistance of really, really big steps. So that could mean that we're going to have a nice correction to the downside. So 0.99 on USD CHF, a key point there. And the last one, USD CAD. Also, we are approaching a level of resistance. We're actually right here. This was the pin. If you take a look, the high was 128.999. So 129 key level for USD CAD. Of course, two main factors is what the dollar is doing in general, the dollar index, and what the oil is doing. And take a look, even on the oil going higher, the strength of the dollar overpowered it. So USD CAD is moving higher. Even the oil recently had the move higher. So very serious level here, as you could see. We bounce from here, we bounce from here. This is the recent third attempt to break through 129. And if we do, we might continue to 132, 133 area. So that's as far as the Forex. And let's take a look at Bitcoin. Bitcoin has been super weak. If you take a look at the daily chart, this was a surprise. And that's what I share with you, that we've been trading in the channel between 35 and 39,000, and actually previously was between 39 and 49, but we didn't hold really over here. If you take a look on the daily chart, the 4th of May, we finally broke through the 39. We closed it, so it did, I guess, give hope to the buyers. But then the following day, we just broke through it and just went straight. So it could be that there were a lot of stops here for the buyers, and that increased the sell-off power. So we had a very strong sell-off on Wednesday. Of course, as I mentioned to you, it looks like Bitcoin is moving together with equity markets and against the dollar. So the strength of the dollar is hurting Bitcoin, and the weakness of the equity markets is hurting it. So now, again, what's next? I'm not here to predict anything, but it looks like we potentially go and retest these two attempts that we had around 34,000. So that's a possibility. Okay, so let's summarize what we spoke about today. We have a lot of signals on possible recession. US, UK just said the same thing. A lot of analysts are signaling it. So there's a risk of trading, even though Powell was trying to reassure everyone that there's no threat or anything. And they're trying to really have a soft landing, not to really crash the economy. But it looks like the investors are really selling. So the risk of equity market is down. Dollar has been skyrocketing, been very strong, and that caused the gold to sell off. The cryptocurrencies suffer because of that as well. And we have a few announcements this week. As we said, the yen is in focus. Let's see if Bank of Japan take any measures to weaken the yen. And we'll be watching what happens. And again, I forgot to mention the NFP numbers they came out pretty good at 428,000. The market reacted initially positively, then nothing major happened there. So the whole focus is, of course, on the upcoming interest rate. And this week, the inflation data is going to be very crucial to see. So I want to wish everyone a successful week and enjoy the weekend, what's left of it. And we'll be back next week. All the best. Take care.